and welcome out to the halftime report here, presented by Tackle Trading. Coach T, Coach Matt, here to bring you a live YouTube halftime show here, Matt, about stock market, option market. I guess the markets. That's what we call them, financial markets, right? Kind of a big umbrella. How you doing this morning, brother?
Doing very good, Tim. Looking forward to a great halftime report here. Got a lot we're going to talk about in the skyline: economics, stocks in the news, earnings. Stocks on our mind, bull, bear picks, and then we're going to get into a little bit of a deep dive on what the collar is, kind of explain the three-step process in what a collar trade is and why we do it and when we do it.
I agree. I think it's going to be great. We've got a bunch of symbols we're going to go through here today. We've got a structure, a schedule. We're also going to have some fun. Welcome out our halftime crew, hashtag halftime crew. Always good to see you guys popping in here right away. And let's rock and roll here, Matt. The news every day for the last 6 months feels like there's always going to be a headline somewhere about trade talk, whether it's with China or whether it's in the TPP or whether it's with NAFTA. We've seen that over and over and over and over again. They've got some artificial deadline to get something done with Canada by tomorrow. Seems like people with good intentions are moving towards that. Markets are slipping just a little bit, but nothing crazy. What's your first reaction to the S&P down here for the first day in 5 days?
I'm freaking out, Tim.
Are you panicking?
I'm selling everything and I'm panicking, and I'm gonna go to cash, and then I'm gonna go to the bunker, and I'm just gonna play recorded versions of your bunker impression just to keep my mind active. That's what I'm gonna do.
Just on a loop. Make that your ringtone. We should pull that audio.
No, obviously I kid. It's a profit-taking day. Economic news wasn't bad, right? I mean, came in line. There was nothing shocking there. The trade discussions between I was going to say China, but I did really love President Trump's tweet to President Xi yesterday. But the trade deals or the negotiations with Canada are ongoing. They're working through the night. They got a deadline by tomorrow. It does seem like, regarding these trade talks, it does seem like there's some positive momentum with Canada. But I just want to say one thing to this. In looking at that deal between Mexico and the U.S. that was just kind of agreed in principle to, in looking at the negotiations with Canada, and I know we're in this political environment where we have to get rid of the NAFTA name, but in looking at these discussions, Tim, the only thing that we're really seeing here is basically a marriage of the TPP trade deal and the NAFTA trade deal, which two deals Trump wanted to get away from. Mm-hmm. But they're basically one deal they're both deals wrapped into one deal. There's not that big of a difference in the two. So there might be a lot of headlines out there, but the reality is we're basically just coming back to par for the course. But it's my hope that we do get an agreement by Friday that will continue showing positive momentum from a trade discussion. Trump talked about how this trade discussion, especially in regarding to China, could last into 2019. I fully expect that to be dominant in the headlines in later part of 2018 coming into 2019. But over the last week and a half, 2 weeks, Tim, we've seen positive momentum there, and the market has responded very, very bullishly. It's just getting a little bit overextended. You're having a little bit of profit taking, and really there's nothing to see here. For me, this is a really, really good opportunity on the downside in the market over the next 3-4 days. There's a lot of good bearish setups, starting to form. And because of that, I'm carrying a neutral delta. I still have a lot of bullish trades on, but I am carrying a neutral delta right now, just simply because I think the market's just slowing down short term, should come back down a little bit. Overall, trend is still intact. Overall, bullish mentality is still intact. You just might see a little bit of short-term profit taking here.
We're talking about the U.S., Mexico, and Canada in this NAFTA deal, bringing in some of the TPP stuff. It seems like Trump is really focused on getting these deals done this year. Obviously, trade is a huge initiative. He's winning most of these deals.
Listen, he is. I mean, but okay, he is in the short term. Okay, but trade deals and not trade deals, but trade wars always hit the aggressor the hardest in the long term. Okay, So this is a
Yeah, but in the long term, we'll be able to say that was just our crazy uncle. Don't worry about old Uncle Donald. All right.
I
You
get
know
that.
us.
I
We're
get
we're the
that.
good guys. Yeah.
As a left leaning individual, I'm sure you appreciate calling President Trump Uncle Trump. Apparently, he's now your Uncle Trump and Uncle Buffett.
Uncle Sam. I mean, listen,
And
that
Uncle
Uncle
Sam,
Sam.
Uncle Trump, Uncle Buffett. I love it all. But it's a fine line we're walking here, because if Trump can navigate this choppy waters, it's going to be a very big political win, even if there isn't a lot of real change there. But because it will be perceived as real change, it's going to be a political win for Trump. And so I think he's going to push this coming into the midterms. I think that's why we're having these aggressive deadlines with Canada and Mexico this week, especially in light of some of the negative political news over the course of the last couple of weeks with Trump. But, you take that out of it. We all want these trade discussions to get over with. We all want these trade wars to get over with. We're all hoping for a soft landing in this. And it seems from the outset, obviously we're not insiders here, but it seems from the outset that there is positive momentum, and that's a good thing.
I agree. Take a look at EWW real quick while you're on this chart. It's an ETF for the Mexico index economy, a lot of the stocks in Mexico and whatnot. Mexican stocks on this news, you would think they would be doing better. They're down to flat, not looking great. Do you put any, no pun intended, stock into looking at the actual response into these ETFs for these countries, Matt?
Oh yeah, you definitely, because that's what the market gauges, right? I mean, the market tells you what they think of the deal all the time. Whatever our opinion is just our opinion. The market response is the most important thing. And the market in the U.S. responded positively. The market in Mexico is responding a little bit of a muted response, a little bit slightly down. If you're looking at this Mexican ETF here, number one, it's showing an M formation and potentially reversal type situations. But obviously, a slight negative reaction. I wouldn't say it's anything crazy, though. I'm taking the news as positive. That's how I'm taking it.
Take a look at EWC. That's the Canadian ETF of similar style and type. And kind of muted, flat, not really anything to see here, right?
No, nothing to see here, nothing to analyze here.
Let's walk around the entire indexes in the market. We started with the S&P, little red candle here today. When I'm looking at this, I don't just look at the colors of the candles, Matt. I look at the percentages up on top. We're down 5 points, 0.2%. 2,900 has become an intraday level that it's trying to hold here today. Mm-hmm. When you have a red candle that is inside the body of the green candle and still has a higher low, that's still carrying bullish momentum in general, right?
Oh, yeah. And I mean, when we were in our pre-production meeting, I mean, you nailed it. You said, hey, listen, if it hits 2,900 intraday, that thing's going to rally. Mm-hmm. It's starting to rally on the intraday already. Didn't even really give you your nice little trigger at 2,900 down here. It's rallying back up. But, the positive thing here, Tim, is because we see rallies intraday all the time. But the positive thing from an intraday perspective, Tim, is it got up above these intraday resistance levels right into that range. So it got up above those intraday resistance levels. You're seeing positive momentum coming on the intraday. So even though it's a little bit of a profit-taking day, there's not a lot of bearish sentiment out there. I still think you got some really good bearish opportunities in certain sectors, but the overall mindset of the market is still positive and it's still bullish.
I agree with that.
It is getting it overextended. We talked about that yesterday, and so you might want to tap on the brakes there, but it's still a positive bullish trend.
As you look at the overall trend of the market and you get to a high point, this is when traders can start to make mistakes, though, Matt. I will say this, knowing that the market should pull back is not a reason to bet against the market. Just make sure we're clear on this, because I've seen that mistake over the years from traders. They start to do counter trend trading. They want to catch a profit. They put on too much bearish delta, or even as big of a mistake, Matt, is they fail to trade the upside when the markets are bullish, right?
You definitely want to carry bullish positive delta here. Me personally, I have a neutral delta, but even though I have a neutral delta, it's still weighted slightly bullish. Does that make sense?
Yeah, of course. Yeah. All right. Moving through the different indexes, let's take a look at the Dow Jones and then the NASDAQ and the Russell in any of those orders, actually. I look at all four of them first. Now down 0.33%, 86 points, hanging out up here at the high point. Same as the S&P, in my opinion.
Yeah, same as S&P, just slightly overextended. Not showing the intraday strength that say that the S&P is. I do have it as the fourth lagging index, and you're seeing that today a little bit.
Yeah, I've got the Dow in fourth spot as well. NQ I have as number one personally. This is where I've got it rated. To me, the strength in tech has been the story for years. It's continuing to be the story, even up to this point today. The other markets are down. This one is up. It tells you all you need to know about relative strength.
No, we've talked about this extensively throughout the entire year on the podcast, or here when we started doing the halftime report a couple months ago. It's extremely bullish right now. It took a little bit of a break in July when it was forming the cup and handle. Once it broke out of the cup and handle, had a tremendous amount of room to run, and it's running. You got to love the bullish momentum. I said 2 days ago on Monday, or 3 days ago on Monday, I said on Tuesday, if you can't buy the breakout on the NASDAQ, I don't know what you're doing trading. And this is showing strength still.
I'm going to continue to make you do it. So we're going to go RTY, then the VIX. Click on RTY. Down a little bit, red candle today. Got potential for a pullback here, but again, still very strong, Matt. That red candle doesn't tell me that it's bearish, And I know that a lot of traders are looking for a little pullback back in the 1700 zone.
Don't think you're going to get it.
May not. It doesn't look like it. It's very, very strong. I've got that ranked number 2.
I still have a 3. S&P's 2 for me, but like I said yesterday, very, very close on those two. It's like pick your favorite child. I have 4 of them, right? So
no, you don't.
I do have. I have 4 kids. Last I checked, I don't know if I think I have 4 kids.
Well, you have 4 kids, but you don't have 4 favorites. I love your kids, but we all have a favorite. I got to tell you, in different ways.
Oh, you're going to put that out in the public.
I'm going to leave this one alone. It's just parents. Listen.
Yeah.
It's just the way parents are.
For my kids that might watch this later on today, I love you guys all the exact same. I do love the Russell 2000 on a breakout here as well, Tim. What I'm kind of reading here, and this does happen a lot, I've talked about it quite a bit, but if and I'm going to just pull up a quick paint program, Tim, just to kind of show you the kind of what I'm talking about.
Oh, here. This is one of my moves. I love paint.
Yeah, you love the paint program. And if I could find my mouse in that white C there. But I'm going to just kind of draw a trend line here, right? So this is your standard bullish uptrend, higher high, higher low. So let's say the Russell 2000 is doing this little number.
Sure.
Well, you're at the high point here. Your expectation is it would start doing this little number here, coming back down into what you said is that 1700 number, right? So the Russell's right here. You expect it to come down and form that higher low. But what happens a lot of times, ladies and gentlemen, is you don't get that. What happens a lot of times is you just kind of stagnate and you form what's called a high base type situation where it just consolidates right here. And then what you're looking at is you're looking at it for it to break out of the high base level, and then it's wanting to run again. And kind of the analogy, and I don't know if this analogy works very good, but kind of the analogy that I've always given, it's like, Tim, if we go outside and we go run as fast as we can around the block, right?
Okay, I'd like to see this.
It's 90 degrees outside. It's not very humid. We live in the high desert, but it's hot outside, and you and I are not exactly the athletes we once were back in the day. So if we went out there and we ran around the block as fast as we could, we'd want to take a break. We'd get tired. We want to put our hands, actually, we'd probably lay on the grass, but that's what's happening in the Russell 2000 right now. It ran very fast from support to resistance, and now it's simply consolidating between 1720 and 1740. For me, the better trade signal is not a pullback down to 1700, although I would buy that as well. I think the bigger trade and the better trade, the higher probability trade, is a breakout of 1740 on the Russell 2000.
We got a family barbecue here on Saturday at 4:00. I think that we're going to have a foot race, Matt.
We had a foot race at Chris's family reunion a few years ago. Mark, you, me, Chris, Mike, Dave, Gagan was there, all the brothers. and it was recorded, but luckily we have destroyed the recordings of that of that race. So we're not going to do that. But at the same time, I will buy the breakout of 1740 on the Russell.
Heck, I might even buy this intraday pullback.
Well,
Quite frankly,
I take that back. I'm not even going to buy that. I'm already bought it. I bought it on the breakout of 1700 and 1720. I'm not getting out of it. I'm just going to continue. I'll adjust that stop loss up, but I still got a bullish read on this. I still like it. Just showing a little bit of just slowing down. Looking at kind of coming back to the S&P 500, Tim, and the reason I have the S&P 500 is it's not really slowing down. You got positive momentum going into it. I love them both. NASDAQ, S&P, Russell on the breakout of 1740 now, and the Dow Jones is lagging. And I'm just having a hard time. You've asked me this question so much, Tim. At what point do you think that the Dow is going to pick up steam? I don't think it will. I think the other indexes will outpace it in a bullish market, and it might pick up. It might come back down when the markets come down, but those other indexes are outpacing.
Very, very good. Take a quick look at the VIX. Okay, now go ahead and move on to gold.
Thank you.
I'll be kind to you today. Gold is actually in a bear retracement, red candle, pivoting, triggering, but you got that 1200 mark that is holding gold at this level, Matt. Yeah. If you're a technical trader and you're not short yet, you're probably waiting for more confirmation.
If you're not short yet, you're waiting till under 1200. Yeah. And mind you, it's a significant whole number. It acted as a little bit of a support zone for a couple days back here in mid-August. Mm-hmm. I don't think that's very strong, to be honest with you. I think it's just a psychological level, but the overall mindset of gold is still bearish. Mm-hmm. I still have a bearish call on this. I went short on gold. When was it? Tuesday, right? Went short on gold. And it was on Monday. When I said, it was on Tuesday, when I said, if it comes down underneath this intraday low, I'm going short. It went underneath the intraday low. I went short, still short here today, not worried about 1200. Certainly think it's going to go back down to the lows of 1180.
I've been very vocally and very publicly bearish on gold for some time with you as well. And this has me, pausing, like the whole price of gold is here today at 1200, but I'm not changing any position. It's more of a position trade for me, Matt, especially with my belief of what actually will happen with the dollar, which we'll get into here in just a minute. Crude oil.
Sorry, Goldbugs, you're about ready to go to Twitter and complain a little bit more.
Yeah, I know. I'm sorry, Goldbugs. Actually, I'm not. My opinion's mine, and I'm going to have it recorded.
And especially, Tim, when you look at, the dollar here.
Yep.
I'm not buying the dollar off this deep retracement. We deep dived into that reason yesterday, but this dollar should rally back into the resistance levels of 95.5. And if the dollar does rally there, you should see gold back down to 1180.
I respect how hard it is to develop an opinion on something too much to just start calling something bullish when I went neutral. I believe the dollar can rally, but I've got a neutral call on it, Matt, until I see something, right? It's like I have an anticipation that maybe those fundamentals can kick back in, because quite frankly, that stuff that happened last week on Friday with Jerome Powell, I don't believe that's the fundamental reflection of where the currency markets are.
Jay Powell caved into Trump political pressure, gave a speech to get him off his back, and that's all that was. And there's no intention of the Fed to actually come off there. And by the way, the economics of today justify it. When you saw consumer spending come in at line, you saw the you saw the PCE index, which is a gauge the Fed uses for inflation, come in at line. Yeah. We're inflating at right 2% every single year. That's in line with the Fed target. Unemployment is still under 4%. Even Trump says that the economy is doing better than it's ever been. And if that is a true statement, if the Fed does not raise interest rates in that environment, what is the Fed doing? So, it goes against their entire mandate since 1913 till 2018. If the Fed does not continue its progression in the rising interest rate environment. And so I don't see anything that happened last Friday to change what Jerome Powell is going to do for the rest of 2018. I fully expect interest rate hikes in September, and I fully expect interest rate hikes in December, and I fully expect 3 more interest rate hikes next year. I think Jay Powell was simply cowering to President Trump and the political pressure, and that's unfortunate that a Fed who is supposed to be an independent, entity, caves into political pressure. But we've seen this all the time. We've seen the Fed, despite their non-political agenda, is a political arm. They are. They're people, they're individuals, they have biases, they have opinions, they have belief systems, they have all these things. We've seen the Fed act politically many, many times in the past, in working with Wall Street, in working with the Treasury Department, in working directly with the government. And I just think Jay Powell gave in to the criticism that President Trump was giving him over the last couple of weeks.
The Fed is simply a group of noble academics doing the best they can. No, I'm just messing with you. Don't get right. Do not get worked up. Do not get
you are you are very, very caring and idealistic, man. I appreciate that about you.
The dollar is hitting a low point. Green candle today.
Let me speak to that very quickly on the dollar. Tim, you can expect the dollar to rally in the short term and still have a neutral rating on it, right?
Yeah.
Okay, you can expect the dollar to rally and not make a trade on it, right? We talked about that yesterday. I expect the dollar to rally into this 95.5 level over the next week and a half, 2 weeks. But that doesn't mean I'm going to make a trade on it because of what I talked about yesterday. It came under, it blew past my technical analysis. And so because of that, I'm not making a trade on that. But even if you expect the dollar to appreciate, that can help me make my assessment on gold, which is divergent, right?
Sure.
So what I expect to happen here on the dollar, Tim, is I expect over the next 2-3 weeks for the dollar to go into a neutral type of trend. And so because of that, I simply expect the dollar to rally back into resistance. And when it rallies into resistance, if it doesn't break, I'll say, you know what, watch that thing come right back down. If the dollar does rally into resistance, 95.5, that gold trade that we've been talking about, Tim, will benefit in that environment. That's why you have to analyze the dollar.
You know, the reality is the currency markets are the biggest markets in the world. And if you're out there and you want to add a speculative part to your trading, Forex is a good component. We look at the dollar every day. It's the number one currency in the world. I was looking at the index charts for all the 8 major currencies, Matt. Long-term New Zealand dollar down and bearish, Australian dollar down and bearish, CAD down and bearish, flat for a couple months. But in general, down and bearish, the Canadian dollar. Your commodity currencies have been taking it on the chin this year. In fact, for the better part of 7-8 months.
As they always do.
Yeah. And then the pound, the euro, they have been beaten up relative to the dollar this year. As the dollar rallied, they went down. Well, same thing with the yen and same thing with the Swiss. But I do like the Swiss franc now. If I had, I loved your call. It got me thinking about this, Matt. If I had to go find another currency to play, that dollar Swiss pair, or even just the Swiss against other currencies, could be an area of opportunity.
Well, I made that statement the other day when I felt like the dollar was declining against the Swiss franc. The Swiss franc was representing some opportunity. It's overextended on the downside right now. Mm-hmm. You couldn't make a trade there. I fully expect the dollar to rally, kind of like I do with the dollar index. I fully expect the dollar to rally, and as the dollar rallies, that should drive the dollar back up into some degree of resistance on the Swiss franc. That could give you a very good opportunity, not this week, but maybe later on next week at a potential short dollar versus the Swiss franc trade. But the one I'm really kind of looking at today, Tim, is I'm looking at the pound. Pound rallied yesterday on positive news. The European Union basically said that they have a deal that they're going to, negotiate with Great Britain once Brexit is done. Pound rallied, but Tim, where it rallied into was very important to me. It rallied into that 1.30 level on the pound dollar pair. And if you'll allow me to draw a nice little trend line here, Tim, you're going to see something that is very, very exciting. And as you can see, this trend line here, it's rallying right into that trend line. It's coming right into this little level right here at that 130 mark. And you're starting to see a little bit of slowing momentum coming into those major resistance levels. If you look at the overall trend, Tim, it was slowing down here. It started maximizing the momentum to the downside over the course of August, rallies back up into resistance late August, right into that trend line. The pound dollar is something to really keep an eye on perhaps a short pound long dollar trade, especially with the dollar expecting to come back up into resistance. I like that trade setup. I'm not.
Is Gartman short the pound though?
No, it's short the euro, which means I
Oh,
don't want to look at the euro. But when I'm looking at here, I'm not going to make the trade today, but I am looking at it tomorrow and maybe on Monday. I might not want to make the trade on Friday just because of the weekend and all the news that comes out of the weekend, but I'm looking at a potential Monday trade on the pound dollar trade if it does come into a level of confirmation on the downside. Keep your eye on the pound over the next couple of days.
There's going to continue to be action in the Forex market, which is going to drive action in the commodity markets. There's no doubt about it. I love the idea there on the pound dollar. Let's go into crude oil and nat gas. Look at the energy sectors a little bit here. You know, crude oil bullish in the short term. In fact, for a couple weeks now, you know, we really have been seeing green candles. We're at that 70 mark, which still to me is a potential trigger point to the upside. You know, there's no doubt about it. We could run nothing really here today. Relative strength, very interesting trigger. What do you got here, Matt?
Same analysis as I had. 70 is clearly a resistance. You could certainly buy that on a breakout above 70. I'm not going to do it because it breaks my rules, but that doesn't mean it has to break other people's rules, right? They're individual rules for a reason. But looking at the 70 mark, you could definitely buy that. The RSI is not overextended on the breakout. It shows you still have room to run. You don't have any clear resistance levels above $70 until you start getting into 72, 73, 74. So you do have some room to run on the crude oil. I just think it's a little overextended into the breakout. I expect, and again, this is just what I see a lot of times when something's kind of already ran a lot into the breakout. It breaks out 1 or 2 days, comes right back down, stops you out, gets you all flustered. So for me, it's a wait and see approach. If I see a retracement coming back down to 68 and then approaching 70, that's a different take for me. But right now, after an extended run, this is a stay away for me.
Yeah.
Which means I love naked puts.
Yeah, well, I mean, you can always cash flow on stuff. When we say stay away, it may just be stay away from a directional delta-based trade.
Yeah.
One that we may trade delta-based today is natural gas, though, Matt. You had called that. I think that you're going to see a potential rally here. It's got a trigger intraday today, red candle, inside candle. You know, people, I think, falsely read candles in some regards. They look at that candle, they might think bearish. I don't see that candle as bearish. It's got a higher low on the tail.
First of all,
it's got a higher body. No, red does not necessarily mean bearish. It means
and green does not necessarily mean bullish either.
That's right. That's right.
You got to learn how to read the actual candle. So continue, T.
Well, I actually like this setup here, a little pullback pivot. If I'm looking for an area in the market to maybe play a retracement, natural gas, I've not pulled the trigger on it yet, but I am interested. I don't know.
No, I love this setup here. You know, in terms of the retracement back down into 284, it's got a really solid retracement. It's slowing its momentum. I will not play natural gas directionally here. This is what the personal gold system is all about. But this is a perfect setup for me to issue naked puts on natural gas. And so for me, this slowing momentum, even without confirmation, is kind of my trigger to go out there and do naked puts on natural gas. So that's what I'm going to be doing on
it. The tough thing, I was pricing naked puts today, and I would love to do one.
Can't do it on UNG.
Dang money in UNG naked puts.
Yeah, and look at this, Tim. Okay, you take UNG for example, and this is frustrating when it comes to the commodity ETFs because these commodity ETFs 2, 3, 4, 5 years ago, Tim, they were great naked puts, great covered calls. I mean, when I first started doing personal gold back in 2015, it basically was naked puts, covered calls on the ETFs, right? I had to modify that about 18 months ago to do it in the futures market because you just couldn't get in terms of UNG, USO, SLV, GLD, any of these ETFs that track the commodity market, you can't get any credit for them, right? And so you have to be able to modify it. And just to kind of explain that very quickly, if I'm going out, say 30 days, we'll just say 30 days, and I come down to even a 22 delta, which is a little aggressive for me, Tim, with the delta on a naked put. I usually like to do somewhere around a, 7, 8, 9, 10, 11, 12, 13 type delta. 22 is very aggressive for me on a naked put. So, but you just don't have anything out the 12 delta. You got what, $8 a contract at the 12 delta? That's
There's no
nothing.
money.
You're getting $18, $19 at the 22 delta. So let's just say, let's put it into the mid-price one contract. You're getting $17 for 370 buying power. I mean, you can't do that. I mean, commission alone is going to destroy you. But if you're looking at it from a natural gas perspective / NG, and this is obviously a much more aggressive type trade here, not for the people that are very, very new to the market. But Tim, I can come down to the 2.7 contract at 12 delta, an 88% projected probability. I can switch that to the 9 delta here, switch that down to the exact same one contract, and I can get $90 on $690 buying power, which is about 14% ROI, which you certainly can do.
Which is better, but I got to tell you, even 6 months ago, pricing futures options at 26 days, you would have got 25% ROI. The money
there were times, Tim, I know this naked put on crude oil and natural gas probably more than most people do. And 6 months ago, there were times I was getting 25 to 30% on a naked put on natural gas and crude oil. Yeah. Now on both of those, you're getting 14, 15, 16, 17%, which is still good, but that just shows you what volatility has done over the last 6 months.
Yeah, I agree. I don't ever like to say never.
Or the market makers getting wise to what I'm doing and they're trying to upset me. There's also that too.
I doubt I'll ever have a trading system where naked puts are not a part of it. So I will continue them and look for them and look for opportunities in naked puts.
I still love them in the futures market.
Yeah.
But if you, first of all, for the pro members of Tackle Train, by the way, hashtag Team Tackle, hashtag Halftime Crew. Welcome out to the halftime report. Give me a nice little hello, like, and share. If you're part of the halftime crew and you're enjoying what we're bringing to the table today, make sure you show us some love and some support there. But in looking at this, Tim, I still love naked puts there. For those of you who are new to futures, make sure that you go over to Tackle Trading, watch that Futures 101 class that is available to all of the pro members. That will teach you the basics of trading futures. It's a really good class that Grant Larson, a futures trader, did. It's basic, it's high level definitions, really good for those of you who are really, really new to futures. But for those of you who have some experience here in the futures market, understand the leverage component, understand the risk component, naked puts are still really, really good. If you're not comfortable with the risk of a naked put, the bull put spread in futures are still really good. And some of you might be like, well, Matt, how do you do a bull put on something that's priced at $2.85? Well, it's really, really, really simple when you deal with the futures market, Tim. I can come down to this exact same 12 delta that we're doing with the naked put. I can sell that in a vertical spread instead of the naked. I can control my risk a tremendous amount better with that. Instead of getting $90, Tim, now I'm getting $70. Instead of $650 in buying power, I'm only putting up $287 in buying power. That to me is the better trade of the bunch, even though it's not necessarily well, I take that back. You're still getting on the, I take it back. It's not necessarily a theta trade, but it's a much better way to protect and control the risk versus, say, a naked put in the actual commodity itself.
I love it. There's so many opportunities as we go through the market. As we finish up on the commodities and the indexes and whatnot, there are several stocks I want to take a peek at, Matt. Amazon was in the news today. We've been talking about it. By the way, you mentioned the halftime crew. One of our regular members of the halftime crew, she told me yesterday, she said, Tim, that section you did the other day where Matt, built a bull call, it made me realize that my theta on my long calls was killing me. So when Amazon broke out, I confidently traded a bull call. And Matt, that discussion you had put her in a strategy where she had about a $2,000 profit on the one trade. So you gotta love that.
Yes.
Guys, that's what we're here for, right? Don't be shy about wanting more money. I might have leftist politics in many ways, Matt, and conservative views as well, but I am a capitalist and I do like money.
Oh, you're a cold-blooded capitalist. Are you kidding me? This whole mindset of, you know, you have to be a Republican to be a capitalist is the most crazy, ridiculous thing I've ever heard in my life.
Yeah.
I am a centrist leaning conservative. You are a centrist leaning liberal. We're very, very similar to one another. But at the end of the day, Tim, you and I are cold-blooded capitalists.
By the way, I had a student once ask me what I meant by that because he was trying to figure out my politics, nice guy. I really liked him. David, it was his name. And I said, well, I think what it means is I don't really care if people do like certain things, social stuff. And if they want to do it, it's their life. He's like, I don't care either. So I might be more conservative than I think.
You're middle of the ground. You're more libertarian than you are left leaning. But
yeah, it's true. Actually, very, very true. Amazon here. We want to talk about hitting a mark here, Matt. 2023. We did some numbers pre-show. If it gets to 2005-1, it's a $1 trillion company. If our math is right.
I got another feeling, Tim. I got another feeling. My feelings have a tendency to work out. Right? Remember when I said Apple had a feeling it wanted to get to the $1 trillion 2 days later, is that $1 trillion? Remember when I said I had a feeling that Amazon, when it broke out in 1900, had a feeling it wanted to just hit 2000. I got another feeling, guys. Amazon wants to be a $1 trillion company. The market wants Amazon to be a $1 trillion company. This is what we call a hot take, guys. This is a hot take. Amazon wants 2051. It just wants it. And because Bezos wants it, it's going to happen.
Most likely. Yeah.
Oh, this is just bullish. It's wow.
It's a beautiful stock and a beautiful trend and a beautiful breakout. And we've been talking about it. And, the thing about it is if you're out there and you're looking at it and you're saying, Tim, Matt, I love it. I want it. I would love to be able to trade it in the future, but it's too expensive. You just need more training. There are all kinds of ways to
break that down. Was that on Tuesday?
We broke that down a couple days ago, I think. Yeah.
I think we brought that down on Tuesday, how you can go from call option to bull call to bull put. And every time you basically assess those three different strategies, you're lowering your costs and you're lowering your risk.
It's a beautiful stock. In fact, it's one of the reasons why the red candles on the markets don't have me concerned as much as maybe some other people might be on a day like today. Mm-hmm. I'm looking at the overall market and I'm seeing Amazon strength. I'm seeing Apple strength. Apple's hitting 226 today, Matt. It's up $3, another percent. Netflix is up $6. Facebook is even showing a lot of strength. Those FANG stocks are where people are putting their money, and that's where the confidence in the market is right now.
No doubt about it, but I'm not confident in Facebook. I'm confident in the rest of them, but I'm not confident in Facebook. Yeah. Thanks, Facebook. I got out of you yesterday. Thanks. Appreciate it.
Some stocks that are had earnings that I want to talk about. CRM. I like this one, Matt, for a trade, actually.
Went long.
Guys.
Nailed it at 150.
Yeah.
Well, speak to this, Tim, because you had an excellent point when we were doing our pre-production. Both of us went long in our pre-production on CRM. We had a very similar read on this, but Tim, you were talking about how CRM's earnings were a blowout earnings. They had fantastic earnings, 30% year over year, 30% future projections, second quarter blowout, 71 cents a share, destroyed its earnings. The only hiccup was maybe third quarter earnings were going to be a little concerning, but out of that it was a blowout earnings. This is a juggernaut company. Both of us love this company. Both of us went long when it was down 2% earlier today when it hit that 150 level. And you made a really good point when you were talking about how on this positive earnings news, it didn't gap down even where the market thought it would. And you saw that as positive. Will you speak towards that?
In my opinion, as a mentor, as a coach, I'm going to give everybody some direction out there. Learn earnings for many different reasons. But one thing is it will help you understand companies better. Okay. When I'm talking about gap expectations and volatility and all that, Matt, it doesn't just set my opinion for what to do on the earnings, but also how to understand the reactions to it. CRM was expected to move more than it did today. It was priced into the market. The market makers did it in the options market. They thought it was going to have a bigger gap, either up or down. Now, this morning, CRM gapped down, but not very much, right? And you might be thinking, well, Tim, 2-3%, that's still a pretty good gap. No, it was expected. If it would have had a really bad report, it would have gapped 5, 6, 7. Okay. And I think the expectation was about five or six, somewhere in there. So when it only gaps down 2%, I know that it is beating the expectation of what the market maker had said. Mm-hmm. Then you dig into the headlines and you dig into the numbers and you dig into the information. They blew the quarter out. They killed it.
Fantastic.
Yeah, they killed it. And so I wasn't concerned with the gap. This was a gap fill trade. Now, it's not exactly run 30 points or anything. When it hit
Tim, I'll tell you right now, if it did run 30 points, you wouldn't have bought it.
No.
Either would I. Would have I. And so, if it would have gapped out to 170, I guarantee I would have said, let's let it wait. Let's let this kind of volatility smooth out. Let's let it come back. Kind of like the Walmart example that we were seeing on its earnings report last week. Did you go long on this yesterday or 2 days ago?
Bull put, but
yeah. I haven't went long on it yet, but I am going to. Looking at Walmart here, it gaps out like that 10% movement you're talking about, Tim, it retraces back down. Then you're looking at getting into that CRM. If it would have done the same thing, you would have said, okay, let's let that thing come back down. Let's let the trend and the pattern smooth out. With what happened today on CRM, I see this as a positive type situation. And Tim, I hadn't even looked at CRM between the time you and I made the trade and what's happening. Tim, it's up $3 in the last 30 minutes.
Yeah,
just off that bounce at 150. I'm seeing this as very positive coming into it. If you're looking at this saying, well, Matt, what about that 155 level? A breakout of 155 at this point would be extremely strong. Would you agree?
Yeah, I love CRM. I love the entry. I love the setup. I know that it's probably a more complex entry for some traders who are used to looking at charts differently. Well, but that's where you got to learn the earnings. You know what I mean? Play the breakout at 155 too. Yeah. I think you got a new trigger at 155. If that hits new highs, it is still very, very bullish. CRM in the news, Dollar Tree in the news, and Dollar General. Look at both the dollar stores. DLTR first.
Getting smoked.
Not good. DG next.
All of them getting smoked.
Not great.
Although DG coming down into a potential support zone, Tim.
Much better.
That bullish uptrend, still a bullish pattern. Obviously, let it smooth out what's happening today. I don't like it as an earnings today like I like CRM. But over the next couple of days, tomorrow coming into Monday, if that starts slowing down, doji type candle, that's a very small candle for those of you who are very new to trading, very small candle followed by an upward movement in price. That to me is kind of what you're looking for.
Abercrombie and Fitch. Retail roundup here, Matt. Did you work at Abercrombie once?
What?
Did you work at Abercrombie once?
No, I did not, but thank you for thinking of me that highly.
I can't remember. Campbell's Soup.
Hold on. There is some truth to this, though. I worked when I was in law school, what's another store like Abercrombie?
American Eagle?
No.
The Gap?
No, higher end.
I don't know.
I don't know.
I remember this. You worked there for like a couple months or something.
No, I did. I worked there for 2 days. I showed up. They had me folding clothes, and I had a softball tournament the next day. And the woman says, well, you got to work tomorrow. And I said, well, I got a softball tournament tomorrow, and I really don't like folding clothes. So I think she fired me, but I might have quit. I don't know. But yeah, 2 days I was in retail.
Did you walk in and they gave you a really tight T-shirt and some cologne?
It was one of those places that too tight jeans.
I can't remember all the different stores. A&F not doing well here today, gapping down. Campbell's Soup, CPB.
Does Buffett own Campbell's?
He owns a big portion of it, I think.
Okay.
They're trying to spin off a lot of their company. Yeah, they're trying to. In fact, I was reading some stuff today that they're trying to sell certain divisions, maybe even
they should sell more company.
I guess the soup business is not exactly as good as it used to be.
Make your own soup. It's better anyways.
They need to get Terrell Owen, or who was the guy? Terrell Davis's mom back in the day. The chunky soup. That was a big deal for a while. Earnings after the bell here, and tomorrow, Lululemon. By the way, earnings traders. This we're not going to price this one today, Matt, but I like inverted flies and
I like the inverted fly as well on Lulu, Tim. I expect it's got a big market maker move, expect to move about 8-9%. It certainly can do that, but typically it hasn't. So I do like the inverted fly on Lulu for those advanced option traders
something
out there.
bi-directional. I'm looking for a gap here. I think it's going to have some kind of big gap. ULTA as well.
And again, we're not going to price. Expected price movement of 16 points here. If you look at the kind of recent history here, it's probably a fairly decent market maker move, but I do expect slightly less than the 16 points, which means inverted fly on that one as well. I'd like inverted flies on both ULTA as well as on Lululemon. Tim, stocks on your mind. What do you want to talk about?
Oh, everything in my mind is on my piece of paper right here. So first one I'll talk about is Pan W. I put Pan W, not Pawn Shop, although I've not been in a pawn shop in a while. Yeah. PANW. I had this one, and Matt, we had our.
Can I just say something?
Yeah.
Okay, because you're not going to tout your own horn. Not in public, you're not going to tout your own horn. Wonderful play on this one out of the options report from last week, Tim. Love the breakout at 220. It's hit your price target this week alone. Great trade by you.
Well, it's not just me though. And one of the things I want to do is tell a story about last Friday. On Friday afternoons, Matt has organized a convening of the minds, right? All of the coaches for tackle trading are coming together on the afternoon, and we have this group session where we go through our scouting reports and we start planning and preparing for them on the weekend. Somebody in the chat put in scouting reports. Let's make sure that we're framing this correctly. And Matt, 3 people independently had Pan W as an idea. I brought it and Mark's like, yeah, that's one of my favorite stocks. We all confirmed it. It's been just a beautiful, beautiful trade. And on that weekend, you can use those reports as a way to set yourself up for the week. Get all of these stocks, no doubt about it. I like Pan W. That one's on my mind. Profit-taking zone for me.
Profit-taking zone, definitely.
Yeah.
And that's an easy call in the profit take zone, Tim, because this was like a bull call spread type trade. It's coming into the call that you sold. It's slowing its momentum right here at that call. I love the trade. Trade worked out. It's overextended. It's done its job. Get out. Love it.
Biogen. Now I know this isn't one of your, instinctive trades. Probably for a lot of reasons, I'm guessing. I know you pretty well. Maybe don't like the gapping nature of what it did before and all that kind of stuff. Once
the trend and the pattern are not 100% like in line with what I'm trying to do, I just go somewhere else. It doesn't mean it's not a legitimate trade setup. So when I say I don't like something, Tim, it doesn't necessarily mean you shouldn't do it. It just means that for me personally, that goes against some of my rules. But it's a good breakout of a previous level of resistance, and you're already filling the gap. I can definitely see this as a breakout play. It's just not for me.
Yeah, I like it. I like the potential here. And one of the ways I like playing it, Matt, potentially would be with a call ratioed back spread, which is more of an advanced strategy. But I do like to have some protection on the downside if I do get a gap against me. I wouldn't go long call. I would most likely do some version of a spread.
To do some type of spread here.
I would agree with that. UNG, we talked about. CRM, we talked about. Retail is on my mind as well. XRT.
Well, we were looking at 3 different ways to play retail here. We were looking at XRT, which is the Spiders S&P Retail ETF. You're looking at XLY, which is the Consumer Discretionary ETF, and you have RTH, which is the Vectors Holders ETF. Tim, you're looking at something. I want to explain to the people watching here. We're looking at 3 retail type ETFs, but 2 of them look identical and one of them look completely different, Tim.
Sure.
In looking at the Vanguard ETF, not the Vanguard, but the VanEck Vectors ETF on retail here, overextended, I expect to pull back here. XLY, overextended, I expect to pull back here. But Tim, XRT here is showing a little bit of a pullback coming into support with confirmation. The question I have for you, Tim, is just in 30 seconds, explain the difference between these 3 ETFs even though they all track kind of retail itself.
If you're going to trade something, know what it is. All right. I mean, it doesn't mean you have to be an expert at every different nuance thing of everything, but you got to at least have a basic understanding of the composition. It's like before you eat something, you should look at the ingredients, right? And the ingredients in an ETF are what we call the holdings. And it's public information. You can look it up online. Just put in the name of the ETF and then put in the word holdings, and you can find it. And Matt, they all have the word consumer or retail in them. And they all would be in that space or sector, but they're not the same thing. Mm-hmm. RTH, and I looked this up this morning, RTH is only 25 companies. Okay. So if you're playing the RTH, what you're doing is you're heavily weighted in Amazon, Home Depot, Walmart, Costco, Lowe's, CVS, Walgreens. I mean, that's a broad spectrum of different kinds of companies, right? You've got Target and Cisco and CVS. It's like big stocks. And you can read that in this prospectus. Now, 25 largest companies is different than trading the XRT. And I was looking at XRT, and I believe, let me get the exact number here. There are 88 holdings in XRT. So when you're trading XRT, you're getting all of the Lululemons and the Abercrombie and Fitches and the Gaps and all those other ones in there as well. So it's a bigger sample size of different kinds of companies. And over the last week on the halftime report, Matt, we've examined enough retail earnings to know that not all of them have been great. Some of them have. Walmart was great,
especially this week, Tim. It's been very. If you combine the last 2 weeks of retail earnings, I'd say you're mixed, right? If you were to look at this after the Walmart earnings, the Target earnings, retail was extremely strong, right?
Yeah.
But after what we've seen this week, especially with what we're seeing in, Dollar Tree and Abercrombie, Dollar General, these types of companies, it's probably one of the most mixed sectors overall from an earnings perspective this quarter.
Well, and I think it comes down to essentially what we're looking at here is three different versions of a similar type of thing, but they are different. It's like when we look at the S&P, the Dow, and the Russell, Matt, they're all indexes, but they are different compositions. You know what I mean? Mm-hmm. RTH is the biggest 25 retail companies. XRT is the more broad-based mid-cap and large-cap retail. XLY right there in the middle is a conglomeration of a bunch of stuff. It's not all the big retail stocks like Amazon, Home Depot, Comcast. But Matt, you've got Disney in there. You've got Netflix. You've got McDonald's. You have more consumer discretionaries. It's more of a broad grouping of companies, which is why you're seeing those charts look a little bit different. So if somebody tells you they're going long retail, if it's me, Matt, I like the chart on the left. I don't know about you. I wouldn't want to go long retail on XLY RTH today. I like the pullback on XRT.
Yeah, it's an interesting trade setup because you're looking at retail, but you're looking at different segments of retail and you're looking at different conglomerates of retail, right? Mm-hmm. So if I'm looking at a potential trade here and I'm bullish on retail, I'm waiting for discretionaries and RTH, the holders. I'm looking for those to come back down into support. I'm looking at potential pulling a trigger on XRT today, Tim. I like that technical trade setup.
Banana Republic found it for you.
That was it. I know, Adam. Thank you so much.
Ding. Adam, I like it, Adam.
You. I worked at Banana Republic when I was 22 years old for 2 days. I don't even think I got a paycheck, Tim. I don't think they paid me for those 2 days. Banana Republic, you owe me $38.
Matt, I'm going to choose to be kind and not take some shots here.
What do we want to do? Take shots at all of us? What we did in college?
I was a pizza boy, so I don't know. It is what it is. You got to have jobs like that. I think it's good. My daughter, she's 18 years old this month, and she's working, as a waitress on the weekends. Small part-time thing. Somebody asked me, well, why don't you teach her how to trade? And I said, I'd love to. She doesn't want to. But as long as she's learning some hard work ethic and all that kind of stuff, that'd be great. I don't mind. You got to have jobs like that.
I'll just say, you definitely do. And number one, having a job as a child when she's 18 years old teaches her some good hard work. I mean, our father told us to go dig a ditch and fill it back up, for crying out loud. But, I want my children to have the hard work mentality, Tim. Yes, we're traders. We're basically hanging out at home all day long. We don't have, we're not digging ditches anymore. But I promise you, we built houses, dug some ditches, did all of that jazz. And Tim, our success, I put a lot of our success on the fact that you and I, even though we're not blue collar workers anymore, we have that blue collar mentality, right? We have that coal mining mentality. Go out there, pick yourself up, get the job done. And that's something I want my children to have. That's something you want your children to have. The trading and the investing, my son is doing homeschool for high school. He does financial education 1 hour a day. And I get to tell him what he does, right? I will teach them in time, but they have to come to me. You can't push your kids into this. They have to come to you.
When I was a kid, I thought Dad was crazy. Now I understand why he made me take a bucket out and fill it up with rocks.
He's still crazy.
Something.
He's still crazy.
He's the old man. All right, a couple
XLRE.
more.
I do want to quickly go through some rapid fire here, ladies and gentlemen. We've been very bullish on XLRE. I'm coming off that bullish call on XLRE. You're looking at here, you're seeing a double top type situation. It's looking very different from the behavior of it is behaving very different at resistance this time in comparison to others. I'm looking for this to consolidate over the next week. So I am no longer bullish on this. I will be bullish on a breakout of 34. So I want you to write down that number, ladies and gentlemen, on XLRE. $34 is your resistance level. Also looking at this, Tim, Jack, JACK. Love the potential setup here on Jack off the pullback, off a reversal. You have a W formation, breakout, reversal type pivot. I like that one. Keep an eye on that. That's a stock that is confirming today. DTE, Tim, love this technical setup on DTE Energy. Look for that to appreciate. Next, I'm looking at XLE. Talked about this yesterday as a potential bearish trigger. I am the only thing I'm bearish on in my portfolio is basic materials and energy, and it's because of they're both at resistance, expecting them to come back down. Also, the only other thing I forgot, obviously bearish on EEM. Finally, Tim, showing a profit on the bearish call on EEM. I expect the emerging markets to get beat up over the next week.
Well, I first of all, I will say this. I am strengthening my resolve on that decision to go bearish on the emerging markets. I actually think it's got tons of weakness potential.
Yep.
I know it's only down. I might add to the position.
I might add to it. DO Diamond Offshore, love this bearish retracement. That is a potential trigger under 17.5. Weeblo WB, love this bearish setup.
Not a Weeblo. Hold on. A Weeblo is a young scout.
It is. I know that's what we're calling this company.
We're not calling it Weeblo.
We are absolutely calling it a Weeblo. I'm trying to make it stick here. Okay. Weebo WB, but it is pronounced Weeblo. This stock, that's like the conversation we had on Schlumberger versus Schlumberger. But looking at this, love this bearish setup, love the confirmation. This is a stock that is just absolutely getting destroyed out there, looking very good from a potential bearish type setup.
Yeah.
Then you have just the ones we looked at yesterday in energy. ExxonMobil still showing weakness, Chevron, CVX. Still showing a potential hair trigger here on Chevron, showing a lot of weakness. Look for weakness in energy, basic materials, the emerging markets. Look for the U.S. markets to continue to run bullish, even though short term it might have a little bit of a profit taking section. And Tim, that is a great halftime report. Did you guys enjoy the halftime report today? If you enjoyed the halftime report today, guys, give us a yes in the chat. Give us a like on the like. Give us a share. Show us some love there. Guys, we just want to say thank you so much for being the best part of Tackle Trading. Thanks for coming out here every single day and supporting what we're trying to do. You guys are absolutely the best. Hashtag Team Tackle. Hashtag Halftime Crew. Thank you so much for everything. Tim, send us out.
Well, and go ahead and bring your screen down here for just a minute.
Really quick, before you bring us out. Hey guys, I do just want to highlight something at the website. If you go here to Trade Center and go down to glossary, if you guys ever have a hard time understanding a definition or a term, every day at Tackle Trading, we're adding a new video glossary on our YouTube channel. Okay. When we put a new video glossary of a definition of a trading term or technique, that automatically comes here to the glossary. So it's in the Trade Center glossary. It's for everybody. And as you can see, we're starting to get a tremendous amount of definitions out there. So if you don't know what ATR is, for example, you hit ATR, it will average true range price over time. Here's a recommended reading on it. Looking at the bear call spread, here's the definition, here's the video on it. So if you ever struggle with any type of definitions, guys, we're going to be putting out a video definition every single day on YouTube that will automatically come over here to the glossary. Tim, go ahead.
First of all, there I am on that video right there. I love doing them. I think that it's going to be an incredible thing. You know, guys, if you spend more than 5 minutes around us, you can probably tell that we enjoy ourselves doing this. We love trading. We love building a community. So, and I will remind everybody of a couple of, kind of things that happened to me in the last few days, Matt, that it just gives me pause as I close this up here. Number one, reading Tyler's blog about his cancer story, making that public and being vulnerable like that. I got to tell you, I connected with it, and I got a little emotional about it. I remember when Tyler went through that. He's a young man. We've very much, mentored Tyler in many, many different ways. He's been a friend and a colleague for a long time. That was great. I don't know. Did you get a chance to look at that one?
I have, and we've known Tyler for a very, very long time. He's such a wonderful, wonderful trader, only surpassed by how good of a person he is. He is one of the best people I've ever met. He's an ethical person. He's a moral person. He's a principled individual. He's a caring, giving entrepreneur. Just absolutely love everything about Tyler. And it was a deep dive, and it kind of reminded me a little bit of what he went through. It's been years now. But it's something that you can learn from everybody. And then, every one of the halftime crew, you guys know Tyler so well. He puts out so many things for us over there at Tackle, one of our leading traders over there. Just absolutely love everything about him. And it was a powerful read, T.
So, yeah. And then another one, I was very blessed yesterday to have a student of mine just kind of pop in. I grabbed coffee with her. And when I ran into the coffee shop, I saw a little 9-year-old girl with her, and they'd gone on a river rafting trip with their synagogue and some rabbis that they knew. 7-day trip down in the Green River, Matt, actually where we grew up. And I'm like, well, why don't you come over and meet my kids? And I brought the 9-year-old and her over to the house, and we sat and chatted for probably an hour and a half. And it just reminded me of something that I know. And Matt, you know this very well because we've been doing this for a long time. Guys, the relationships and the communication and the long-term value that you bring to us and we can bring to you, that's really what matters. And that's why we do this each and every day. And I was just feeling very, very blessed and touched for that moment yesterday.
Yeah, it was a really cool moment for you. I mean, somebody that you met 18 months ago. She's been all of her family have been pro members over there at Tackle Train for the last 18 months, and her story is very similar to a lot of other stories where at first it doesn't click. Right, it just doesn't click. It's overwhelming. It doesn't click. It's confusing. It's scary. It's greedy. It's everything. Right. But now she's got a consistent trading routine. She's a consistent trader. She's, participating every day when she's not rafting down the Green River, she's in the halftime show. She's, attending all the coaches shows, cash flow lounges, coaches lounges. She's doing everything she can to go out there and be a great trader. And she's turning into one. But the thing that she told me that was kind of shocking to me, Tim, and what you reiterated, her brother, right? Her brother, who was, basically a blue collar
mechanic
guy, right? Didn't even know how to use a computer 18 months ago. And I'm dead serious here, guys. He did not know how to use a computer 18 months ago. And now he's the best trader of the bunch, basically paying bills with their trading. And that is something that is amazing. And I'll tell you, Tim, when I hear these types of stories from these students of ours that come through the gauntlet of that first year of trading and can overcome that and get around that, I just get so motivated to go out there and fight for our entire team. And that's the one thing, that's the promise that I've given every one of our members over there at Tackle Trading for years and years and years now. We will strive to be the absolute best we can be. We will strive to give more value than anybody else. We will strive to educate the masses, and sometimes we will fail, but you know what? We're going to get right back up and we're going to do it again. And I just think we have the absolute best team over there at Tackle Trading. I love them so much.
You know, there were times in my life where seeing that Yankees hat would have triggered a rant. From now till the end of the time, I don't have it. Why are you wearing a Yankees hat?
I wore it for Marquise.
All right, Marquise, there you go, buddy. Hey,
showing some love, Marquise.
He's endorsing the Eagle Empire.
No, I am an Oakland A's fan. Always have been my whole life. I'm really loving this A's team. But I am also a closet Yankees fan. I have to admit it publicly. I've never been able to get over that. But no, I do love this hat. This is one of the best hats in sports. I love this hat.
So the Yankees are second in the AL East, looking pretty good. Obviously they got a great roster. I just
watching baseball when the Mets got taken from Bernie Madoff.
First of all, one of my favorite stories about baseball ever is Bobby Bonilla's contract. You've heard of this one?
He still gets paid $1 million every year. Bobby Bonilla is to baseball what Warren Buffett is to investing. He got the best dividend payout ever.
Smart move, Mr. Bonilla.
Smart move. You're a genius. And that's why the Mets are the doormat of everything in baseball, despite being a big market team. Tim, I feel bad for you. You have some of the best pitchers out there, and you can't put a team together. The A's don't have a budget, and they're just coming around like a ragtag bunch. They're the bad news bears is what the A's are, dude. Everybody should love the A's.
All right, we're out. I don't need to defend my Mets. I know they're terrible. We'll
see you guys tomorrow.
Yep. Peace out.
Like and share.